Your money-making broadcast starts now. Markets ended the session essentially flat today. The S&P 500 slipped 0.3% to close at 731.58. The Nasdaq eked out a marginal decline of 0.1% to 694.94. The headline indices barely moved, but beneath the surface, individual stocks told a much more dramatic story. Intel exploded higher for the second straight day, surging another 13.2% and bringing its two-day rally to an astonishing 28%. PayPal crashed nearly 9% in one of the worst single-day drops in the payments sector this year. Solar stocks caught a powerful tailwind with Enphase Energy up 6.6% and SolarEdge gaining 4.5%. Oil stocks buckled on geopolitical optimism. And Palantir extended its post-earnings slide by another 6.8%. Welcome to the May 7th market close. Let's break down the stories that mattered today. Story 1, Intel's two-day blowout rally. Intel is having a week for the ages. After the company's investor day on Monday laid out a realistic and credible turnaround roadmap, the market has been aggressively repricing the stock. Tuesday brought a 13% surge. Wednesday added another 13.2%. The two-day gain of 28% has pushed Intel to $108.42, a level few analysts expected to see until late 2026 at the earliest. What is driving this rally? Three catalysts are working in concert. First, Intel's foundry strategy is gaining real credibility. The company announced a binding agreement with a major U.S. government customer for its 18A process node, validating its manufacturing roadmap. This is not speculative anymore, it is a signed contract with concrete revenue attached. Second, CHIPS Act funding is beginning to flow. The Department of Commerce has finalized $8.5 billion in grants that will directly support Intel's domestic fab expansion in Arizona, Ohio, and Oregon. Third, the broader semiconductor cycle is inflecting upward. After 2 years of aggressive inventory correction across the industry, chip orders are picking up across the board. Intel is the most leveraged name to this cyclical recovery precisely because its stock had been beaten down the most during the downturn. But we need to maintain perspective. Intel is still a turnaround story, not a finished product. The company's Mobileye autonomous driving division faces significant headwinds as the auto industry slows. Its data center GPU business remains years behind NVIDIA's CUDA ecosystem dominance. Intel's gross margins, while improving, are still well below historical averages. The stock now trades at 24 times forward earnings, which is not cheap for a company that needs to execute flawlessly over the next 3 years. The rally is real, but the volatility will be extreme. Investors should size their positions accordingly. Story 2, PayPal crashes 8.9%. On the other end of the spectrum, PayPal suffered one of its worst trading days of the year, plunging 8.9% to $45.91. The trigger was a combination of analyst downgrades and deepening concerns about payment market share erosion. Several Wall Street firms simultaneously cut their price targets on PayPal, citing increased competition from Apple Pay, Block Square ecosystem, and emerging fintech players in international markets. PayPal's transaction margins have been under pressure for 6 consecutive quarters. Its branded checkout share is shrinking as merchants actively push customers toward lower-cost payment alternatives. The company's ambitious attempt to pivot into higher-margin services, Venmo monetization, buy now pay later installment products, and merchant lending, has not been enough to offset the core business erosion. The stock now trades at just 14 times forward earnings. That is the cheapest valuation PayPal has seen since its 2015 spin-off from eBay. For value-oriented investors, this creates a compelling question. Is PayPal a melting ice cube facing terminal structural decline, or is it a temporarily out-of-favor giant with a billion-user installed base and massive cash flow generation? The answer to that question will determine whether this 9% drop represents a value trap or a generational buying opportunity. Story 3, Solar surges, oil dips on geopolitical shifts. The solar sector staged a notable rally today, catching the attention of investors who had written off clean energy names. Enphase Energy surged 6.6% to $34.70. SolarEdge Technologies gained 4.5% to $43.37. These gains come after months of painful declines as high interest rates crushed residential solar demand across the United States and Europe. But there are early signs that a bottom is forming. Inventory destocking appears to be nearing completion in both major geographies. Enphase management recently signaled that channel inventories are normalizing toward healthy levels. If the Federal Reserve cuts interest rates later this year, residential solar could see a powerful demand rebound as financing costs drop and project economics improve. Solar is fundamentally a classic turnaround trade. The core thesis, that solar power is the cheapest form of new electricity generation in most of the world, has not changed. What changed was the financing environment. With interest rates stabilizing and the potential for rate cuts on the horizon, the risk-reward setup for solar names is improving meaningfully. Meanwhile, oil stocks pulled back on a different kind of catalyst. ExxonMobil fell 1.4% to $146.58. Chevron dropped 1.4% to $182.50. The trigger was news of potential progress in U.S.-Iran nuclear negotiations. A diplomatic breakthrough could bring Iranian oil production back to global markets, potentially adding 1 million barrels per day of supply. That would pressure crude prices globally. However, the impact is likely overdone in today's session alone. Any deal faces significant political hurdles in both Washington and Tehran and would take months to implement even under optimistic scenarios. Story 4, Qualcomm, Cloudflare, AMD join the rally. Qualcomm jumped 8.1% to $182.09, continuing its impressive run. The company is benefiting from a powerful smartphone replacement cycle driven by on-device AI features in new flagship devices. Qualcomm Snapdragon processors are powering the first wave of AI processing in Android smartphones, and the PC market is opening up as Qualcomm's ARM-based laptop processors gain design wins with major OEMs like Dell, HP, and Lenovo. Cloudflare surged 7.6% to $241.10. The company reported strong quarterly results showing accelerating revenue growth in its security and zero-trust product lines. Cloudflare's global edge network is becoming essential infrastructure for enterprises migrating workloads to the cloud. Palo Alto Networks gained 7% in sympathy, as cybersecurity spending remains the top priority in corporate IT budgets for the second consecutive year. AMD added 4% to $355.28, joining the broader semiconductor rally. The company continues to gain server CPU market share from Intel with its EPYC processors and is well-positioned for the AI inference boom with its MI300 and upcoming MI400 accelerators. AMD represents the purest play on the intersection of CPU market share gains and AI accelerator growth. Stock picks for your watchlist. Let me share 4 stocks for your watchlist tonight, each grounded in a proven investment philosophy that has stood the test of time. First, Ford at $11.73. Benjamin Graham taught us the concept of margin of safety, buying quality assets at a significant discount to their intrinsic value. His value investing framework. Ford fits this framework exceptionally well. The company generates strong free cash flow from its F-Series truck franchise, which has been the best-selling vehicle in America for over 4 decades. Ford trades at just 6 times forward earnings with a 5.5% dividend yield. The balance sheet has been strengthened significantly during the Jim Farley era, with debt reduced by over $10 billion. Graham would argue that Ford's brand mode in commercial trucks and its growing electric vehicle business provide a margin of safety that the current beaten-down valuation does not reflect. Second, AMD at $355.28, up 4% today. Philip Fisher believed in buying companies with superior growth potential, strong research and development, and excellent management, and holding them through market cycles. His growth quality framework. AMD exemplifies this philosophy. The company is gaining market share in both CPUs and GPUs. Its MI300 data center accelerator is winning major cloud deployments at AWS, Microsoft Azure, and Google Cloud. The upcoming MI400 architecture targets the next generation of AI inference workloads that will be essential as AI moves from training to widespread deployment. Fisher would see AMD as a high-quality compounder that rewards patient shareholders who take the time to understand the technology. Third, Cloudflare at $241.10, up 7.6% today. Cathie Wood focuses on disruptive innovation, companies that fundamentally change how entire industries operate. Her approach to disruptive growth. Cloudflare is rewiring the internet's core infrastructure. Its global edge network spans over 310 cities, its zero-trust security platform is replacing legacy firewall systems, and its emerging AI inference at the edge capabilities position it at the intersection of multiple secular trends. Wood would argue that Cloudflare's accelerating revenue growth trajectory, expanding total addressable market, and network effects moat justify a premium valuation for long-term investors who believe in the transformative power of decentralized infrastructure. Fourth, CVS Health. The company beat earnings estimates this week and announced it is exiting the ACA marketplace, a strategic pivot toward higher-margin integrated healthcare services. Peter Lynch famously said, "Invest in what you know, everyday products and services you encounter in your daily life." His everyday investing philosophy. CVS is a company every American knows. With nearly 10,000 retail pharmacy locations, the Aetna insurance arm serving 40 million members, and a growing primary care footprint through Oak Street Health Clinics, CVS is transforming from a traditional pharmacy chain into a comprehensive healthcare delivery platform. Lynch would appreciate that the story is easy to understand, the business generates massive and predictable cash flow, and the turnaround is showing measurable results in both revenue growth and margin improvement. 3 key themes define today's session. First, Intel's historic 2-day 28% rally is a powerful signal that the semiconductor cycle is turning and the foundry story is gaining real traction. Second, PayPal's 9% crash is a sobering reminder that even dominant platforms with billion user bases can face existential competitive pressure. Third, the rotation into solar stocks and cybersecurity names shows that capital is actively searching for the next catalyst in a market that is otherwise directionless. Build your watch list around quality businesses with durable advantages. Find the margin of safety like Graham taught us. Invest in growth quality like Fisher preached. Look for disruptive innovation the way Wood does. And keep it simple by investing in what you understand, the way Lynch advised. The best opportunities often come when everyone else is looking the other way. I'm Chloe. See you at 7 a.m. Eastern for shorts. Check our shorts for a 60-second highlight. That's all for today. We all become wealthy together.